Welcome to the High Rise Podcast, presented by Headset, the leading data and analytics company for the cannabis industry.
Emily, how surprised would you be if I told you that free money and a fear of losing access to a product would drive a serious sales increase in that product? And actually, not to mention that this product is something that can be used at home when everything else is shut down.
I would not be surprised.
Yeah, of course not. It's definitely pandemic sales. And that's what I want to talk about here. You know, the pandemic, this is over, long over at this point, right? I know COVID is still everywhere, but consumer behavior is changing and people are going out, people are spending money in different ways. And that's something we looked at Headset here. And it's very topical, I think, because a lot of people have been talking about current state of the markets and how markets are growing or not growing. And I wanted to dive in to that, especially given, we're in earnings season right now, and there have been some good results, some surprises from a lot of groups that we talk about, but also I think some challenges as well, so it's kind of a mix. So I thought we could dive into this report and really kind of just talk about what's going on out there.
Yeah, I think this is timely given that it's our first full half year so far since really, to your point, kind of coming out of the pandemic, although we know it's ebbing and flowing and it'll just probably be now a persistent theme of our lives, what happens next. The shutdown that we saw and the severe shift in societal behavior from that, I think is the part that's going to be the demarcation, especially in this generation. And so I think looking at the first half of like 2020, in 2021 and 2022, looking at these different timelines is a very interesting way to take a look at it. And, it was something I was thinking about as not just earnings for our industry have been coming out, but earnings for other industries. And so, even on Friday, like Peloton announced another 800 person layoffs for their company, and they're going to change their entire strategy in terms of the delivery and all of these things. I mean, the world outside of cannabis experienced wild gyrations around consumer behavior. So we're not alone in this. And I think we've just had to really try to watch an emerging market grow up in the time of tumultuous conditions. And so it's good for us to have this data so we can look at it, take a look and learn and think about what it means for going forward and how we can continue to see expansion.
Yeah, no, absolutely. And I think if anybody listening wants to follow along, and we'll link in the show notes, the report that we published is called An Analysis of Declining Growth in Recent U.S. Cannabis Sales, which is kind of a doom and gloom title. And it's not all doom and gloom, as we'll discuss. There is plenty of growth out there, but this is a state-by-state market, and every state has a unique set of dynamics, how long it's been around with the licensing structure, the type of organizations that are operating there. I would argue even like the consumer habits are, slightly different in market to market. You can see all this data, but what really, I guess to start and kind of where the report starts is looking at first year of the pandemic. So from March 2020 to March 2021, which is crazy that, to think that far back that, that's when all this kind of happened. But Colorado, like the quintessential legacy market, right? The market that came online first for adult use, legalized at the same time as Washington, but beat Washington to market as far as opening the doors. Well, in that time period, Colorado's adult use sales grew by 63%. That's February to July. So just in a few short months, it spiked that much.
I just wanted to call back. At that time, I remember being astounded by that growth because I thought Colorado would experience a challenge because of the lack of tourism. I mean, think about it this way. It was still one of the most open and robust adult use licenses. We knew people were traveling for end of ski season and going into the hiking seasons, and that they would be purchasing cannabis when they arrived in the state because that had been a trend. So I just want to call out that this was a significant shift in consumer spending, and it did prove the stickiness in the local market.
Yeah, that's a great point about travel at that time too, with the summer, people not going to Colorado, the end of the ski season coming off, all that, those dynamics really do impact a place like Colorado and a mature market. So to see that kind of growth, and it wasn't stimulus checks, that was not a thing, right? It was just stockpiling, pure like, okay, we don't know what's going on. Let's start buying cannabis. Let's, get as much as we can here. before everything gets shut down, because that was the big concern, right? Are these stores going to continue to stay open?
Exactly.
So from March to March of 2020 to 2021, the average monthly year-over-year sales in Colorado grew 26%. So yeah, every month, 26%. I mean, that's huge. And Oregon saw the same thing. Average monthly year-over-year sales grew almost 37% during that time period. So massive growth. This is, not a surprise. This is something that we've covered, ad nauseum, just about this like COVID pandemic spike. And now, fast forward to today, mid-August 2022. And when you compare, kind of year over year, you're starting to see some declines. And I think there are a lot of factors that are going into this. I think that, I remember last summer, it felt like things were open, but then things quickly shut down again and kind of pulled back. People are out, stores are open, restaurants are open, people are able to spend money in different ways. People are dealing with, inflationary pressures right now. And, that story hasn't been written, recessionary challenges. Like if that is the case, is cannabis going to be pretty resilient? But we do have some data kind of looking at the first half of 21 to the first half of 22. And, many markets, like particularly the legacy markets, haven't grown or have actually contracted a bit. But, some of that is a correction, right? I mean, we're still dealing with these, I think, amplified sales from 2020 and just those purchase behaviors. There's that thing that everyone was saying that, COVID accelerated everything by, however many years, like trends, like, okay, now, working from home was a thing and now it's really a thing. And digital conferencing, Zoom calls, like, I think it was pretty rare for people. Now everyone's using Zoom. I remember SNL had like a whole gag on like Zoom because everyone was in it all of a sudden. So it's just the great accelerator. I think that some of that has stuck around and some of it is pulled back, right? Like tides kind of come out a little bit. So looking at these markets, we've got Colorado first half of 21 versus first half of 22. Colorado's actually down 16% versus 21. Nevada's down 16%, Oregon down 17%, Washington down 13%. So that's pretty tough for some of these markets. But again, it's almost more of a correction, right? You still see growth when you compare 22 versus 2020, but some of that growth, when you're looking at this, the difference between the years, it's pulled back a little bit. And those are the states, like I would say, legacy states that have, seen the worst in the context of negative growth. California is there too, a negative 4%. California's a massive market. So, minus 4% is a big number when you compare it to, a market like Colorado or Washington. But there are other markets on this list that ended up okay. Markets like Massachusetts up 19% first half of the year versus second half of the year. Markets like Michigan up 30% first half of the year versus first half of this year. And Michigan just hit their highest sales record yet in July of 2022. So, or monthly sales record. So it's not, every market the same. And some of these emerging markets are showing a lot of growth. And I think there's some factors that are going into that. But that's kind of what I want to pick apart today in our conversation. Just what is the difference and how does this impact, these publicly traded companies that are reporting their earnings, and how does this feed into those earnings? And when we say cannabis sales are slowing down, what does that really mean when you have markets that are also growing?
Yeah, I mean, I think that's what everybody needs to keep in mind. I don't think this means that people are losing interest in cannabis. I think we're just seeing a societal shift, resetting, getting back into or finding whatever the new pattern of life is going to be on the go forward. And at the same time, we saw the government checks stopping and we saw the prices of the core things going through the roof: rent, gas, and food. And people have to make real decisions about their spending. And now there is some, discussion and discourse around how whether or not we're in a recession, I almost think really doesn't matter. What matters is how the consumer feels about what's in their pocketbook and what they can spend. We know consumer credit has exploded during this time, and we know people are starting to put projects on hold in terms of like buying new homes, expansion of renovating their homes. And so certain things are starting to slow down. And I just think we saw, unfortunately for cannabis, again, as an emerging market, we see these very tight and condensed cycles. And so we saw that amazing ramp up, and then we saw a really sharp shift in terms of what people had for discretionary spending. In some of these markets where you see the most pressure on the downside on this, so you see up 19% in Massachusetts. Massachusetts is still an early market. It's a market that had opened technically as an adult use market and then has very slowly rolled out the retail doors. And so again, similar to California in some regards, where this is an access to cannabis issue. It's not a demand issue. This is what I want to make sure, because we talk about things in terms of macroeconomic terms like supply and demand, but the important thing around that is the demand exists. It's the access to it that makes it difficult. And Massachusetts has now been opening more retail doors, but the operators in Massachusetts will be the first one to tell you that the wholesaling side of that business is very difficult and competitive. So there's all this distortion in pricing on the back end, and the MSOs are definitely feeling that because there's more capacity built to grow than there is to actually get it into the hands of the consumers. Nonetheless, as doors open, more consumers have access, there is growth. And so that is really exciting. But in those markets, we used to say it's like, open door, have success. Very much seeing this in New Jersey. It's selling ice in the desert. But in Colorado, Oregon, Washington, and even to your point on California, 4% like it's a smaller percentage shift, but on the value of the dollars, it's still a significant amount of money. You're selling ice to Eskimos in those markets in some regards because there's so many doors that are open. Well, not California. I should not speak to that. I think that's more about the illicit market presence. But I do think there's these shifts, and price sensitivity is definitely coming into it. I know you and I have discussed that operators are going to have to think about how they package up cannabis and make it available to consumers to make sure that they have access such that it fits into their share of wallet still as they get through this period of time where the core is so expensive in their lives.
Yeah, all great points. And about that access, Michigan, with that growth, they've opened a whole host of new retail stores, and I think that's driving a lot of that growth. There were 526 dispensaries open as of June 2022. That's compared to 389 in October 2021. So just in a 7-8 months, an increase of 35% of doors and access. And, that shows the growth, right? And I also know that Michigan, we've seen some closures too. So it's not an uncommon story. We've seen the same thing happen in Toronto, Ontario, where, they just opened up the licenses and it's been hard for a lot of people to survive. But it does equate to dollar growth. And yeah, you're right. California still seems constrained in that context. And, I'd argue even places like Ontario, there's still like growth to be had, even though stores are maybe closing in Toronto. There's plenty of markets or counties there that, have blanket bans on retailers, and many places, retailers, you got to go really out of your way to get to a store, right? And so I want to chat, quickly on like, where does growth come from, right? Because, the big question is, when do the emerging markets become legacy markets? Is it, 3 to 5 years? And these markets that, a lot of MSOs have exposure to are, eventually, many of them are constrained already, which is why many of those markets are attractive to the MSOs, but it's hard to find growth in that context, right? More consumers coming in those states. But if you can't open more doors, you got to go to another state and you got to open more doors. But some companies like Columbia Care, Matt McGinley, friend of the show, has been on a number of times, had an analysis, and he mentioned, California and Colorado creating margin pressure and cash flow headwinds for Columbia Care, and those are, some markets we called out, right? But, offset by the other exposure they have in some of these emerging markets. So where does the growth come from, assuming, these emerging markets become legacy markets, and we want to continue to see growth, or, just even in the legacy markets, like how do we get out of the way of ourselves so that these markets can continue to grow like they have been for so many years?
Well, I was just talking with Morgan about this when I've been reflecting on the path of cannabis since, for example, just to take the MSOs as kind of the bellwether of what's happening. And we've seen this in the earnings reports. Like we saw, to your point, McGinley, and McGinley is coming on the show on Friday, August 19th to talk about the Q2 earnings. So that's exciting. But, just hearing what he said about Columbia Care with Colorado and cannabis, we know Trulieve is talking about pulling, I believe they said they're pulling officially out of California. These are not markets you cannot play in if you're not very focused and really leaning in on the core there, because they're so competitive and these other markets just function so differently in these limited license capacities. So it's a very different market dynamic. And I think for the MSOs, they're trying to lean in where they get the most bang for their buck right now. But this is not to say that there isn't tremendous opportunity in these very big and established markets. It's just, as we talk about, it's like, this is what you can look into the future and see this. But Morgan and I were talking about it. I was saying, I feel so frustrated for cannabis, given that we are in this emerging market period. We have not had any period of even resembling normalcy since this. We've had extraordinary inflation that you haven't seen in decades and decades and decades. We have a war that is impacting a global supply chain, and we've just come through a pandemic. Forget whatever else is going on, because I can't even get into the global the climate stuff that's happening that's impacting each market in its own way. But I mean, we just haven't had any period of relative normalcy. There are fluctuations in markets for sure, but this has been an extraordinary set of circumstances. So that being said, I just wish we had a little more time to understand the normalcy in our market. Whatever, we'll figure it out. Cannabis is definitely a proving ground for many of us who will never be the same after having been in this space. But I think, as leaders in a consumer market segment that's really growing and expanding, and the good news is has a ton of demand. There is the product market fit. We talk about, Pareto principle, which Headset has been really brilliant at pointing out in their data sets. But I like to think about it as widening of the bell curve of the consumer segment base. So we've got to start getting more consumers into the market. This will probably cost more and will probably require different product categories to really gain traction, so we can attract people who are looking for the lower dose products, people who are looking things for convenience and also for attractiveness. Like I got my cute new little Edie Parker bag. She personalized a bag for me, and it came with a bunch of little rolling papers and cool things in it. But, there's lots of things that are happening. I think this is how we can create. And just like our conversation with Rick Farman about grasslands at Outside Lands, we have to create experiences around this where people can integrate cannabis into the other facets of their lives. And so I don't think this is all bad news. I'm an eternal optimist, but the way I think about optimism is to take what you can from the thing that has gone wrong and learn a lesson and create an edge around that. And I think this industry can create an edge around that. And the operators who pay attention and will have the brands and the retail experience and the digital experience that will last into the future. And that's really where the growth is going to come from. It's great to turn on new markets and see this massive growth when you do, but you have to be playing the long game, figuring out how you then grow it organically once you're in those markets and once the competition becomes more fierce.
Well, absolutely well said. And I can only hope that the next big report that we do in the future is an analysis of accelerating growth in recent U.S. cannabis sales, not declining.
I think it will be. And I have to say, everybody should look at this report. If you're looking at investing in cannabis or participating in cannabis, I read this on my flight over the weekend, and I was definitely very interested to see the graphs and charts. It's got a lot of great information and it's well presented. So I highly recommend.
Oh, thanks for the plug.
Thanks for listening to the High Rise Podcast, presented by Headset. For more information on Headset, visit headset.io.